All right. Now you can hear me talking through the computer again, correct? And so when you hit that, I'm sorry, I was I was doing something on my end. When you hit that gear icon, you see the microphone. It just doesn't give you a choice. Yeah, you press M to mute it. Is it white? I guess. Huh? It should be coming. I don't know. What is there a drop down and you don't have any choices? Yeah. Yeah. They're, I'm on my desktop, so I don't know. Um, yes, well, you've called me, so why don't you try to join with your phone? So just the link that I use that link that I emailed you. Hello. No, I'm not hearing you again. That means it might be on our end. Um, that's really strange.
Can you hear me now?
So, you know what? Just mute your computer. The speakers on your computer.
Yep.
There we go. Perfect. All right. This is going to work.
All right. I might have to hold it here. How's that? Like, can you see me?
Yeah, we can hear you just fine.
Okay. Keep sliding down.
It's all right if we get a little late start. We were a little late getting the notification for the show sent emailed out.
Yeah.
I wanted to pop up a couple more. What do you use for charting? Do you ever go to barchart.com?
Yeah, I use Bar Chart and Quick Trade.
Is Quick Trade free?
No.
What do you use for your trading software?
Just QST, Quick Trade. It's got everything.
Oh, QST.
Couple of Russians in New York.
No, I used to use that as well. QST. They have a really excellent mobile format.
Yeah. No, it's good. And as you can tell, I'm not a technological person, so I'm quite happy to just stick with what works. You know what I mean?
Yeah. Yeah. Let me let me put this up here and then drop it down. And I gotta get back to Restream. Where are you? There we go. All right. Well, welcome everybody. It is January 31st, 2023. This is one of the most expensive days of the year for me. And today it was exceptionally expensive. It is my wife and my daughter's birthday.
Ouch.
And my daughter turned 16 today. She went to the DMV, and got her driver's license. So I need to be calling my insurance agent this afternoon and adding a 16-year-old driver to my policy.
And you got to buy her a car.
Yeah. I have a son who's 17, so the battle for cars has already begun at our house. I lost the battle this morning. I took the train to work.
Trust me, it won't be last time.
No, it will not be the last time I take the train. That is for sure. All right. As you can see, Greg Kuda is not here today. Greg is on his way to Las Vegas for the International Home Builders Show. I'm very much looking forward to hearing from him what he heard back from the builders. Next week, I'm sure we'll cover that. But today we have Kip Fothington with us, which is excellent because in preparing for the show, we discussed what we were going to talk about. And we're going to talk a little bit about the supply coming out of British Columbia, which Kip is very intimately aware of and involved in. So welcome, Kip. Why don't we just let's kick it off with that topic. Canfor made some announcement this week. What did they say?
So they are taking down two of their mills. The boilerplate number, and they'll be down at the end of April. The boilerplate number, headline number, is 750 million board feet, which is substantial. In reality, those mills have been running about, probably in the last little while, about 20. They, at the end of April, they will officially shut down. There is some talk about rebuilding a different format at Houston, but that's just talk right now. That's going to take a lot of cooperation from First Nations and the government for that to happen. The big thing is, and I think some people are maybe overreading it, is if you have 8 mills and you have logs for 6, your mills are all running at 3-4 days a week, some of them one shift. You shut down 2 of them, you still have the logs for 6 mills. So you're going to be running the other 6 at the same pace the 8 were. And there's a little bit of caribou migration up in Chetwood and stuff like that. But in general, it's nowhere near 750 million board feet has left the market. It's much less. And if all the mills were running flat out, which they're not, because we don't have enough logs anymore, it would be a different case. But that's not what's happening here. Everyone is running at a reduced pace, and they're negotiating with First Nations and the government. There's offtake agreements with pellet mills and obviously with pulp mills. And as they get through that, they'll take production off boilerplate, but in reality, it's going to be much less.
Just so I understand, when you say boilerplate, what you're talking about is the total possible capacity of 8 mills is X.
It's like Houston is a 500 million foot mill, okay, right? They haven't produced 500 million feet in years. There's just not enough logs. So I mean, the headline number, when I say boilerplate, better words, probably headline number. There's no chance they've come anywhere near that number because we just don't have enough logs. And part of it is, if you look at it, a lot of people production, and production is not really the right number. If you're in the US, the number is how much do we ship from Canada to the US? It doesn't really matter if it comes from BC, Alberta, Ontario, Quebec. It doesn't really matter. A 2x4 is a 2x4. So the number is how much are we shipping to the US? And 10 years ago, we shipped 3.5 billion feet, which is significant. Okay. To China, that number has dwindled to almost nothing now. It's a rounding error, 400 million feet or something like that. So we have robbed from Peter to pay Paul a bit. The important number is in 2021, we shipped 6 billion feet to the US. In 2022, we shipped 12.5. The key there is, while we were removing 1.1 billion feet, the price of lumber went from $1,300 to $350. So it's more, I think, on more of a demand thing than the supply. I mean, we reduced 1.1 billion board feet, and the market dropped $1,000. So going forward, are we going to ship 12.5 billion this year? No, it's going to be less. It might be 12.
And 12.5 billion, that's across all of the products.
That's the entire country to the US. That's the important number. It doesn't, the production doesn't really matter. And there's a couple reasons for it. And one is there was a day from the CIBC, one of our major banks, saying that the immigration in Canada is 700,000. Because if someone comes here on a student visa, they still have to live somewhere. They're not a Canadian citizen. But 700,000, to put it in perspective, you guys are 10 times the size of us. That's 7 million people in the US. So they all have to live somewhere. And 1/3 of the SPF market is Canadian. Because we don't really have competing species, right?
Right.
So like the Canadian population is going to absorb more per capita than the US. So we are going to ship less this year. I will guarantee you, just because it's going to get used in Canada. So the production number is a great headline, but in reality, does it really matter if it stays in Canada or it goes to China or Japan? It's what goes across the border is the key number.
Because we're talking about the price of lumber in the United States.
That's the important number, right? Whether we produce more or less doesn't really matter.
So let's just hit up a couple of the things you talked about. China, what do you see or hear happening in China? This has kind of been running in the back of my mind. They're reopening, right? Like things are supposed to be getting going there again.
Yeah, I mean, they're obviously they have a fairly serious issue in their property market, which they will deal with because they have all the levers to deal with these things. But the last 4 weeks, shipments orders to China have skyrocketed because of the price. And as soon as the price, we've gone up almost $100, right? As soon as that price goes up, they just go buy it from elsewhere. A lot of it's coming from Russia. I mean, Russia needs currency. And there's two things. One, we don't need the business. We certainly did 10 years ago. And the other thing is, as you've moved through the beetle, you've got mills that have gone from 25% low grade to 10 to 12%.
Okay.
So that's really what we used to ship over there. And, your need for that market and the pricing that's involved with it is kind of gone away.
Got it. So China is less of a factor. Potential from when the market structure is such that they'll take some product. I guess China probably raises the floor price more than anything.
the international floor price. Well, I mean, when they have to get it from somewhere. I mean, they have the world's largest housing market by, I mean, I think housing starts in China are like 10 or 12 million or something like that,
Yeah,
right?
wow.
Or more. So it's big, but there are, it's just lumber to them. It's mostly used for strips and in concrete buildings. They don't really build with lumber. So, you can use anything. It's just, you got a concrete wall, concrete floor, concrete ceiling, and you've got to put some kind of, covering on it. A strip is a strip.
Got it. Japan has been basically a non-factor for 20 years, right?
Yeah, I mean, we had, if you look at the shipments to China, it's the perfect chart, right? It was zero, it went up. I used to work with a guy who did a lot of business there, and it went up. 2014, it went from, the perfect curve, 3.5 billion feet. China's the new market. Then, as prices in North America increased with housing starts and the need to, I mean, you're not going to ship to China if you owe Home Depot some wood, right?
Right.
And so it peaks in 2014 and it's come right back down. And where it was in 2005, we're right back there. Non-factor.
Non-factor. You have the opinion that the Canadian factor is moving higher.
Yes, due to, I mean, we have kind of the same problem you guys do with inflation and wage growth. We need more people. That's simple. We don't have enough people to fill all the jobs in this country, so they are ramping up immigration to. They already have, and it's going to continue. And those people need somewhere to live. And they're saying that we need, between now and 2030, we need 5 million housing starts. That's
a lot, you guys.
For our country.
Yeah, that's wow. Okay. Let's talk about a lightning rod, the U.S. softwood lumber agreement. We saw some of the numbers got shifted around.
Yeah, it's a little bit confusing because they do these administrative reviews, and the administrative review that comes on in this August is from 2 years ago's pricing. So as prices come down, we will see duties lowered a little bit. But honestly, other than the Canadian discount, which may sometimes is there and sometimes it's not, right? Other than that, these mills just absorb it, and they don't get counted. So if you're buying Canfor stock or West Fraser stock, they get 0.00 consideration and expense. If they get back 70, 80, 90%, they're big numbers. And right now, I think the total today is about 7 billion US. And it's going to take 2 more years. So by that time, it's going to be 9 or 10 billion, depending obviously on the price. And, they're going to cut a deal most likely, but maybe not.
This is money that's sitting in an account, essentially. Just
it's sitting in with the Department of Commerce. And the problem is for the coalition is what's going to happen when you give the majors in Canada $6 or $7 billion. What are they going to do? They're going to buy all the U.S. guys.
Yeah,
they're just going to buy it. So you won't have a softwood lumber problem because you're going to own them.
Interesting.
It's a bit of a conundrum if you're on the coalition side. Like you kind of shooting yourself in the foot when you sign a deal, because the next thing's going to happen. They're just going to buy.
All right. So Greg and I talk about mill break even from time to time, and we put the long-term chart up and we say, it looks like inflation has kind of pushed the floor up. Where do you think the floor is? Rough and dirty. What's the floor with regards to loaded car British Columbia today for break even, shutdown? Like what do you think?
Yeah, I don't think we're anywhere I don't think we're anywhere near shutdown because that, as you and I talked before, you've got contracts, you've got programs, you got employees, you got offtake agreements, you got pulp mills. I don't think you're going to see a lot. What you're going to see is curtailments, certainly rotating curtailments. Tolco, Interfor, everyone's taking rotating curtailments, because if they didn't, how come we shipped 1.1 less billion feet less, right? I mean, we didn't make it. We didn't make as much. So the break even is probably, cash cost is probably about $500. Now that would be if you're running 2 shifts,
Canadian?
and most people aren't.
Is it
US.
Canadian or US? Okay.
Like random length, they're not running flat out, so it's probably a little higher than that. In the East, it depends who you are. If you're a sawmill and only a sawmill, you are below break even today. If you have the other side of the business, MDF, pulp, paper, you're making money on that stuff and losing on your lumber, but your net probably positive a little bit.
Okay.
Pacific Northwest for sure is way underwater. Their logs are ridiculous, and they're taking downtime. They don't announce it. A lot of them are private. They just don't announce it. But it's basically, unless you're resolute and you have the other businesses, I would say in Canada, almost every single mill is underwater. There'd be a few that make some specialty stuff and do a little bit better, but in general, you're definitely, well, when we were at 350 to 400, that's way underwater, like way.
Interesting. What happens if let's say the average price for the entire year is at or below where we're at right now?
Then you would just see the I had a little talk 2 weeks ago with the Raymond James guys, and what I said was, 10 years ago, the top 52% of lumber production was 10 producers. Today it's 3. So you start looking, it was 30 and now it's 10. So you look at that, and they're far more likely, when you have more mills, to rationalize production.
Sure. More people making the decision.
Correct. And then on the demand side, you have 3 on the pro dealer side, you have 3 customers who have 1,200 lumber yards. So the all in, all out on the demand side is there as well. Because if one guy, let's just use BFS. I'm just using an example. They have almost 600 lumber yards. If they decide that housing starts are going down or whatever, and they stop, that's 600 lumber yards that get the kibosh to buy. So it increases the volatility up and down, because the producers are more rationalized, and the customers, I don't know if I'd use the word rationalized, but they're far more all in, all out.
Yeah, it's a sample. It's like statistics. The larger the sample set, the more smooth the curve will be. Here, you are going to have increase in volatility.
And we're seeing it right now, bucks in a week.
Well, let's go into what Greg built us a nice slide deck. Let's kind of take a look at that. That leads us into this first slide, which is, Greg likes to look at the big picture, and I think it's fantastic. Lumber year to date has only been outdone by Bitcoin. So
I don't know what to read into that one. I'll leave that to you.
That you could actually have a joke. So Bitcoin and lumber walk into a bar. Who's going to be more volatile, right? Yeah, look at this. And copper, another known volatile product. The top 4, Bitcoin, Ether, lumber, and copper. It's definitely a mover.
Well, was lumber not dead last year?
It was
So
on this slide.
it's probably not going to be dead last for 2 years.
Well, here's actually something I just put in the back of people's mind, and Greg and I have been beating the tom, hitting the table on this one. The basis is such a big opportunity, and it will change. Like everything changes. What's overvalued becomes undervalued. Last year, natural gas was wildly one of the most, that was on the first chart, the green one. It was the biggest mover into the upside. So what goes up must come down. Now it's the biggest loser.
Oh yeah.
Yeah, that is commodity trading. And I think Matt Lehman also, he talks to the groups that he works with about buying and thinking like a trader. Commodities move in a range, and there are relationships over time, which we're going to show here in just a second. Let's go the seasonals. But before, let's look at our volatility. This chart, he's highlighting that we're back to 3 years ago. The March expiration was pretty weak. That's what it looks like here. Yeah, January, February. Oh, I take that back. So here's January, February. Yeah, March was a very weak month. We
Pandemic.
Oh, for sure, of course.
That's when it hit.
That is right when it hit.
Yep.
We came flying out of there. But I think the overall thing to look at here is we're right back to kind of the norm. But we do know what's possible when you look at these higher numbers up that we experienced.
Well, and one thing I would say, Mike, is if you look at the history of commodities, whether it's silver, beans, whatever, when you have a massive breakout from the historical norm, which we've just had the last 2 years, generally they keep at least a third higher because of whether it's inflation or whatever. There's a reason why it broke out so high. So, and in this case, I believe it's partially due to the demand we just talked about, and also the supply rationality. So that would sort of infer average 380 for the previous 10 years, right? So you add a third to that, that kind of makes it maybe like 500 is the new sort of normal. And that would jibe with a lot of other commodities that have had this massive breakout to the upside, is you tend to keep at least a third of it. And the cost curve has also moved up. So
yeah, I think that's the real, which we just
the cost curve is probably why, right?
Is right there. Okay, now this was the monthly. Let's go back to the weekly continuation. There's no reason why we can't get a nice pop out of here. Since the peaks of a year ago, this is March, a year ago, we've had one, two, basically three little rallies. 1, 2, call it 6, maybe 10 weeks. So 20% of the time, the lumber market's been going up in the last year prior to this rally. And 80% of the time it's been going down. So we're overdue. This is monthly continuation. Again, I don't know what he's showing here. I think, we can look at some of these stats down at the bottom, which I'm guessing are RSI. These are the technical analysis are definitely oversold. And I think March daily doesn't look that bad. While we've accelerated here to the upside in the last, say, 4 trading sessions, this isn't that unorderly, all things considered.
No, I think part of it, a couple of things. One, a lot of people were expecting or predicting, 1 million housing starts, like a huge drop. And I think the business they're seeing, kind of like March 2020 when the pandemic hit, no one's going to use any lumber this year. And it turned out to be the opposite. I think a lot of people are kind of thinking maybe housing isn't going to be quite as bad. I mean, a million housing starts is quite a drop. If we're at a 1.25, 1.3, that's better than what people's inventory is based on for sure. The Can4 News kind of kick that off, especially, you know, the headline number is pretty dramatic. If we're shipping 12.5 billion board feet to the US, and someone says I'm taking 750 million board feet off, that's serious. And then the third thing is we're in this kind of uncharted time where we are moving from the legacy contract to the new contract, and you've had commodity funds who are short usually, you know, take some off, but general position. And because that's not really possible right now, they've just liquidated. And that has definitely led to, you know, you're going to talk about it, is some incredible basis opportunities by percentage.
Yep.
Incredible.
And they will come back to the norm.
Oh, yeah.
So let's take a look at that spread, the March-May. This is the legacy March-May spread. It's dropped a little bit, which it's kind of interesting. I pegged March to be the strong one, and
well, in a normal without, you know, this legacy new contract, the March would go premium over May. But because, and generally because they're moving their position, but because they're not, and they're just flat out liquidating, it hasn't really done much. It's gone from 14 into even, and now it's at 10 under. Like you're counting on the commodity funds, the short funds, to roll, and that's where your pickup is, and they're just liquidating.
Yeah.
So I'm not terribly surprised that this hasn't really turned into a good trade, because you've eliminated you're kind of water skiing in front of the boat, and when they just liquidate it, it goes out the window.
Yep. Seasonals, March lumber contract close. Oh, this is cool. So where have we closed? We're at the top range of the historicals if you take out 21, 22. But we saw some glimmers of this. The 2018 we closed at 530. Obviously 2018 was unaffected by the pandemic. If I remember correctly, that was kind of the China trade more than anything, right?
Yeah, they were buying a lot of wood, and I think people, like, we had a good spring rally, right? And then the back half of the year, I think the futures market in 2018 got up to like 640, and then I think we bottomed out at like 280. So it was similar to last year, which, we had a good first quarter, and then the rest of the year was just death and destruction.
The forward curve is very short in the legacy contract because it only goes to May. But I think this is fabricated a little bit by the CME, but it's, a traditional carry curve. Probably going to be that way more than ever, or more than recent years, because with inflation, interest rates being higher and costs being higher, it's more expensive to fill up a warehouse with lumber.
Well, and the other thing to point out is that has Chicago freight in it. That's why it's so much higher.
Well, yeah, I'm from the curve shifting. I'm just talking about the further you go out, the more expensive. So it's a traditional carry market.
Yeah.
Now we're talking about our fund basis. Here was the basis as of yesterday, $62. I think that's based. Oh, if I remember correctly, he was basing this off of what he had heard West Fraser was offering.
Yeah.
I don't know. It's still stunning to me that there should be no reason why this wouldn't go more than half if not all the way back to zero before this contract is done.
Or slight discount for freight, and you don't get the 1% discount. It's, to me, most of this basis is a result of 2000 commodity shorts getting liquidated, and
Of course.
generally when they do something like that, it's called, when you have open interest of 3,000 to liquidate 2,000 without, you just do it.
Yep.
There's
Well,
no something.
Here's something else. People are saying, "Oh, there's a bunch of buying going on right now. It's gonna, the market, the wood is in the market." Well, there's still opportunity to roll your hedge out to May and pick up like the $10-15 maybe, and now you're protected till May. So right now, if you had bought wood, like in the wholesale market, you're putting it on the ground. You've got protection all the way to May at a decent.
Well, and the other part is, when that does converge, the basis trader has the ability to be vastly undercutting, the guy who's got VMI wood on the ground based off of print.
Yes.
The basis trader will get every order he wants, because he's got, this was over $100 last week.
Yeah.
And in reality, what you could buy for, what you could sell the board for, and when basis traders have $100 in their pocket on $375 wood, they tend to ring the cash register.
Yes. And they'll ring it for less than 100.
Oh yeah, they most definitely will.
So this is the basis between 2x4 random, cash price, and futures. The interesting thing I look at is how far the other direction it had gone during some of the pandemics, or during the pandemic times. All in, what you realize here is this line moves up and down. It doesn't just flatline at one level. So this basis will come in for sure.
Yep.
So let's take a look at overall open interest. I know it dropped again today. You can see the continued liquidation, which we're referring to in the March contract. Here it only dropped 7. I think yesterday we had drops in both March and May. And we're seeing a continue, well, I guess it's down a little bit, but we saw some growth in the new mini futures overnight. And now here's probably the number one statistic that has been, that you can see what's driving the market, and it's starting to normalize. And it's this number right here. The managed money, which are the funds, their short position has dropped by 60%, 70% already. I think what was the high of it? It was like 2,500.
No, it was just over 2,000, and this is as of the 24th, right? So that's last Tuesday.
Correct.
So looking at the action on Wednesday, Thursday, Monday, you would surmise that when it comes out tomorrow or tonight, I guess it comes out tonight, that number could be.
It's as of tonight, but it'll be reported on Friday.
Yeah, so that number is probably going to be 100, 200 max. They are liquidating out of March, and when they're done, there's going to be a little bit of an air pocket behind them, where if you can buy cash at, let's just say 440, why would you buy the futures market at 525? Well, you wouldn't.
Kip, I really don't. I think that same thing. And then why is this 880 position in the longs for
is that not the Rogers commodity roll?
Well, that's the industry. That's the producer, merchant, processor, user. The industry theoretically is long 880 contracts.
But I think, and I cannot say this, that I know this for a fact, but I'm the Rogers fund that's long commodities since 2003. They are not counted in managed money.
Correct. I think they might be in the swap dealers.
Yeah, I don't. Well, they're saying they have like 500 to 700 contracts. So I don't know where I don't know why they wouldn't be in managed money, but they're not. So maybe that's some of that is them, and they're just going to roll that. They just roll.
But this is getting to be a big number. Like at some point, this whole thing's going to flip, and the longs are going to be the ones that we're watching liquidate.
Well, as Greg Kuda so succinctly put it, the shorts are getting punched in the face, and when that's done, the longs are going to get punched in the face.
Yes,
That's direct quote from Las Vegas.
I love it. All right, let's look at some seasonals. But before we do this, I want to put Matt Lehman is asking a question, and I think Kip is the guy to talk about this. So the difference in the truck freight applied to the new contract 105 that the trader pays versus the rail freight to Chicago. I think what he's saying there is the new contract is priced loaded truck in Chicago versus the old contract is priced loaded rail car in British Columbia. What's the rail freight? What does it really cost to go from Prince George, British Columbia to Chicago?
Rail, oh, well, I mean, it's going to be a little bit less than 105, but then you got to unload it, and I'm presuming that it's loaded trucks, so then you have to pay loading. So I think 105 for rail, for truck over rail is probably, if anything, it might be a little bit more. Might be like 110.
Really? Okay.
The mills will have, I mean, depending where you're going, and straight into a reload, depending how much business they do, the mills certainly can have lower freight based on, if you say, whatever the reload is, I'm going to send in 500 cars this year. You will not be paying 105. You might be paying 95 on rail. They definitely get a break for volume.
But we're not,
because that's how the railways work.
The days of $80 to Chicago are gone.
No, they're long gone. It's 100, and I think to Dallas right now, on average, it's like $140. It's a lot, and it's the UP. As of January 1st, I believe has gone up 8%. CN's like 3%, but UP's 8%.
All right, this next one, the seasonals, and this is something Matt Lehman studies and discusses. I'm of the belief that we've done a bit of a shift this year and that we're just kind of late. Maybe this bump here was the inventory build that we may have seen traditionally at the end of the previous year. What do you think?
Yeah, December.
So, the seasonals bode well for a sustained rally here, at least in the last, the 3-year, obviously, but even the 5-year.
Yeah. It's traditionally, this is when the market goes higher, either into March or May. That's kind of the two. It's one or the other, and you can look at the chart and see it pretty clearly. I mean, that's only a 5-year, but even if you look at a 10-year, it's March or May is higher than the price in December, January.
But the thing I guess I'm looking at here, though, is now you see this kind of point around mid-Feb. That's bearish time for all of the last 4 years. But if we are late this year, maybe we take that all the way to mid-March.
Possibly.
Yeah.
Yeah, it really, I think it really depends, Mike, on if people have an idea of their inventory and what the business are seeing in front of them. If this is better, they will buy more.
I
They
didn't
need
realize.
they need to see it though. They're not going to front run it. I don't think people are, they got their cards pretty close to their chest. So if demand is actually not as bad as thought, um, then people will have to add 100%.
Greg did a really nice thing here. He took the last 2 years out, so this was just the non-pandemic years. Um, here you can see it with the pandemic years. So yeah, the seasonals. We got a little punch in the face, like you said, coming to the market according to the seasonals. All right, so
Yeah.
that wraps it up. Something about the new contract coming out. I highly recommend study it, learn it, know what is in it and how it works. But let's just do kind of an overall wrap up. Kip, are you long? Are you short? What do you like here? What are you thinking?
As far as the futures market, I think we have a little bit of air pockets here. We've gone up pretty far, pretty fast. And, I talked to somebody today and they said, last week and the week before, the takeaway was calmed down a little bit. The RFQs have slowed up, the size of them. I think some people, got caught needing a little bit of wood, certainly studs. And I would not be surprised to see the futures market go more back to cash than cash to the futures market. Because once these guys are done, I mean, you can see how they buy. They turn their computer on and they just want out of their position. But once they're done, and I think they're pretty close now, they're down to 100 or something. That leaves a little bit of air pocket, and then we'll see. Like I said, how is the demand compared to what people thought? And if it's better, people are going to have to buy some more wood. Absolutely.
And you and I talked before the show here about this. I think new home demand is going to be better than people anticipate, but it's going to be in a specific segment of the market, which is the most affordable housing.
Yeah. And they have to figure it out. How do you, I mean, you've already had, prices have come down a bit. They probably need to come down more, but the builders also have to figure out, maybe they make it a little smaller, right? I mean, not everybody needs a 2,800 square foot house, and you can, around the edges, you can offer, free refi, maybe mortgage rates to give them a bit of a break. They have the levers to get the price down so that it's more affordable. They really do. It's just it's certainly going to hurt their margin. They're not going to make 25% gross margin, and maybe it's 18 or 19, but it keeps them going.
Yep. And I think from what the Fed's doing, the overall economic picture, some big ticket items are getting deflationary. Like Tesla dropped the price of their cars. Ford just dropped the price of their cars. I think the end of inflation is very close, if not already upon us, and we're going to see some pullbacks on some of these bigger ticket items.
Well, the one thing I always like, just an anecdote. So like a year and a half ago, I want to buy a gravel bike, not a mountain bike, not a road bike, kind of in the middle to ride trails. I went to like 5 stores. No, it's going to be a year. Like, who buys a bike a year out? Like, really? And now you go to the same stores, 30% off. They're swimming in them.
Yeah.
Bikes everywhere. So, I think it was a little more supply chain than people were giving credit for.
We yesterday were talking to someone who imports plywood, Brazilian plywood, talking about the price of containers. Historically, it was $1,000. It went up to 25,000 or whatever. It's back to like $4,000 and dropping, and they're able to get kind of anything they want. So it's going to take us another 6 months minimum to work through all this, but I think we can confidently say after the 4th of July we'll have a different perspective on what the housing market and overall economy will look like.
Absolutely. Like if you're shipping to China, the price of a container last year to right now is down 75%.
The Fed is achieving what it wanted to.
Yep.
So we need them to just settle down and let everybody get back to what they've been doing in the past. All right. Well, hey, we've successfully burned up 45 minutes of each other's time. Thank you for filling in, and I really appreciate your perspective on the fiber situation, the lumber production situation in BC. I think it's interesting that you hear a big number, but is it really a big number? You got to look a little deeper into the details.
Absolutely.
And you find out they're shuttering production that was never going to get used. They just didn't have the logs for it.
Exactly.
Cool. All right. Thanks, Kip.
Okay.
Everybody, next week.
Bud. Appreciate it.
We'll see. Greg will be back with news from the International Builder Show. And as always, safe trading, safe life, and we'll talk to you next week.